if you guys, have been following our Facebook page, you know that we're going to be talking about a very important topic today. As this presentation is part of the R3 bootcamps that we are hosting in partnership with the with Wells Fargo. And the intentions of these bootcamps is that they provide you with access to resources and tools that you can implement into your business. And now that we're almost at the end of 2021, and you and I know how important it is cash flow. So we're going to be talking about that, strategies to better manage your cash flow with Joe. Joe, thank you so much for joining us today.
Yeah, thank you so much for having me. It's my pleasure.
Pleasure to have you. So I'm going to let Joe introduce himself. And then, Joe, as soon as you're ready, we'll put your presentation up and just say next on every slide. And for everyone that is watching live, remember that you have the option to ask questions right below in the chat, and we will have a Q&A at the end of the presentation. So thank you everyone for watching live. Make sure that you share it, and stay tuned because Joe is going to provide us a lot of valuable tips over the next few minutes. The stage is yours, Joe.
Great. Thank you so much. And hello, everyone. And
I think
you
you're
for taking
muted.
time out of your extremely busy day to join us and really to hear from me on a topic that I'm extremely passionate about. My name is Joe Trimble. I have the privilege of being a small business leader for Wells Fargo, supporting our central region in the central time zone. What that means is I have the opportunity every single day to talk small business in my profession. And I get a chance to do that in a variety of different ways. But my favorite is to be in front of all of you, helping find ways for you to help run your business to the best of its capability. And that is what gets me up every single day and allows me to do what I do. I've been at Wells Fargo now for 21 years. And, I learned early on in my career that if I had an opportunity to go into any specific line of business at the bank, I wanted to make sure that I was a part of the small business family. And it all stems back from my childhood and really how I grew up. I grew up in a family of small business owners spanning from Arizona and into New Mexico. And I had an opportunity to work at those small businesses and get to know the ins and outs, or at least what I thought was the ins and outs. I was more helping family more than anything. But what I did see very clearly is that there needs to be more open dialogue about what it takes to run a small business. And more importantly, what does it take to be what we consider lendable within that financial institution parameter? And I'm going to come to the table today, and what I prepared for all of you is really looking at your business by putting on the hat of a lender, and then how do I help really tell the story to that lender to really obtain the financing and or credit vehicle I need to operate my business. So I'm excited that we'll talk about the steps you can take to manage cash flow as a business owner, and we'll discuss ways that help you take control of cash flow and create safeguards to help keep cash flow positive. Tade, if you would, I'll have you throw my presentation up there, sir. So by understanding what business life cycle stages are involved in the business cash flow cycle, we'll have a chance today to really hone in on what those are. So I promise for all of our listeners out there that my goal and objective today is to really make sure that the content I'm sharing works not only if you're in the startup part of the life cycle, but also will work if you're in that transition part of the life cycle and everything in between. Next. On the agenda and what I'll cover really does revolve around one of the major financial health indicators that for a organization, a financial institution like Wells Fargo, it really does give us the insights to your business and really helps us understand your story. A consistent positive cash flow may help you pay expenses, invest in new opportunities, and grow your business. Cash flow is an essential part of running a business, as it highlights the cash that goes in and out of your company. Today, we'll cover how cash flow works, explore cash flow considerations during each stage of the business lifecycle, and share with you some suggestions that I've learned along the way from business owners on how you can take control of your cash flow and create a manageable plan. Next. So let's start by diving in and talking about managing your business cash flow. First of all, it's important to note the difference between cash flow and managing business cash flow. Cash flow is the flow of money moving in and out of your business. Managing cash flow includes the safeguards that may help ensure cash flow remains positive. Now that I've shared a little bit on what this means and the differences, we'll really discuss the four key areas included on the slide in front of you. Let's start with receiving payments in the upper left. This first area focuses on the number of payment options available and the frequency from which a business receives money in their accounts. The second area of cash flow management is making payments, which addresses how business owners may achieve better control of how and when money leaves their accounts. As we move past making and receiving payments, let's look at the bottom piece that looks into possible safeguards that helps your business maintain positive cash flow. The third area, which is evaluating potential credit options, this area to me is one of the most talked about right now. Credit helps your business manage and supplement business cash flow. And if we think about the last year and a half, having the opportunity to really have this conversation with someone on your trusted advisor team is an important component of really helping you build out ways to safeguard that positive cash flow component of your business. The final and fourth stage of managing business cash flow in the safeguard section really is around planning proactively. And for me, when I hear that term, what it means is really, are you having conversations? Are you attending forums like this? Are you working with your local chambers to really have an idea behind what you want to do to ensure your business operates successfully? I have the privilege of currently being the chair for the Albuquerque Hispano Chamber of Commerce. And when I think about getting in front of business owners like yourselves, these two bottom portions are probably, they're one of the two of the four critical components, but they're probably the least talked about. As a business owner, we always want to get that cash flow cycle rolling, which we always navigate towards that receiving payments and or the making payments bucket. But for today, we're going to use all four of these to really drive our conversation. So when you walk away, not only do you feel good about the cash flow piece, but you also feel good about how you're managing your cash flow. Next. On the screen in front of you, I put together some tips on really ways to enhance your cash flow. Sufficient cash flow is a key element for financial institutions in demonstrating your business's viability with potential lenders. But some small businesses, unfortunately, are faced with challenges which create either a poor or slow cash flow cycle, which can be caused by anything from inadequate pricing to trouble collecting receivables. Let's talk through these 5 steps, and I would love for you to consider one of these steps as a key takeaway and really your next step as a business owner to either learn more about or to ask more questions around. The first at the top of the page is accelerating your inflows. For me, this is a way for you to really get money into your business faster. So to do that, you could think about how today you're sending invoices to customers. Is there a gap between when service or product is provided versus when you're requesting payment? And then more importantly, following up quickly and offering multiple payment options to help bring in the revenue. The next tip is around monitoring your cost. I highly recommend, and I know I'm a banker here telling you this, but I've heard this from business owners firsthand. Monitor and track your bills and due dates and understand, more importantly, how often your inventory turns and know your payroll obligations. The next tip is around watching your outflows. You may consider using business credits for this component of the tip, or taking advantage of trade discounts and even negotiating barter arrangements that may help you as a business owner conserve or control cash payments. The next is cover your taxes. Set aside an appropriate percentage each month. I like this as a tactic for a small business owner because when we get further into the presentation today, what I'll show you is not only a cash flow forecast, but and a cash flow statement. And really, in that forecast, that's where you have an opportunity as a business owner to put in anything that you feel may cause a dip in cash flow. That way you can track it and monitor it up until the time of when it's due, which then gives you a chance to back in and figure out what do I need to do as a business owner to ensure that I'm trending in a positive way, to ensure that that type of obligation is not only paid, but doesn't impact the day-to-day operations of the business. Lastly, and one of my favorites that I talk about a lot with business owners is challenge everything. Are you getting the maximum value for every single one of your relationships? And when I think about relationships, those are defined not only as components who help support and or help you operate your business, but even think beyond that in terms of those trusted advisors that may impact your business because they have a personal stake knowing you. Those are the individuals, and along with those others that directly impact the operations of the business, that you should be dissecting and really understanding more about the operations and really asking questions. This is a space for you as a business owner that is not an easy space to operate in because the feeling here is a vulnerability. But I promise you, just like any good relationship, if that person is vested in you and vested in your small business, you have an opportunity to really learn from them, because they're a person whose opinion is not weighed with any bias, but it is weighted in a way that it does allow you to learn and grow from their insights. So my fifth and final tip here is challenge everything in your business. And when we get to the forecast, those will be the opportunities for you to really think about what are those ways for me to challenge. Next, every business that you operate is very unique. And for today, my goal is to really try to make everything that I'll talk about as common as possible. That way, the characteristics for your business will resonate in terms of what you learned from today and really what you can learn from the different stages within the life cycle. And that's the next topic that I'll cover. Next. Let's take a look at the first stage of the business life cycle and the considerations that you may want to look at in terms of how to help improve and or leverage that managing cash flow component. Our first stage is seed, which is the earliest stage of the business life cycle. Next, this is the stage that really is focused on planning. This is an ideal time for you to build out your business plan and to develop a funding strategy. Now, for me, the important component here is that business plan. And I'm a huge advocate in terms of spending time with a business owner learning from their business plan. So as a business owner, when you get into business, what I've learned is that this is typically the one activity that you do early on, but it's an activity that you put in a drawer and don't revisit. So for me, really having your plan available and being able to draw on it And I know we put it here in the seed stage because that's when it's most commonly completed. But as you think about the future stages when we get there, do you have an opportunity to take that plan back out and revisit the components of your business that were most vital at the time of starting out versus what are you focused on today? I've seen firsthand that when a business owner has a chance to do this, what it really does create is an opportunity for you to look at ways for your business to pivot and ways for you to really hone in on new ideas and concepts that can drive your business forward. I saw a business plan just recently, and in that plan, I found it very interesting that the business owner chose to make sure that whoever read that plan, they had a clear understanding of the skin in the game. And when I say that, what they detailed were the courses, the certificates, the classes that they felt they needed more around in order to really run their business. Now, you're all very savvy business owners, but right now, in this time we're in terms of recovery or with recovery on the horizon, having advice and guidance and really having that plan in place to reflect on what past you said is a gift. And we should really leverage that gift and utilize the work we did to start our business to really take our business to the next level. On the next slide, during the startup stage, as your venture gets off the ground, securing funding is a critical priority. Investors typically prefer entrepreneurs with some skin in the game. I referred to it earlier, right? That plan. That is what we understand as that substantial way for you as a business owner to show your investment of your own money and even your own time. This is where your foundation really sends the message that you're committed to making the business succeed. Now, all of these life cycles, as we go through them in terms of the various stages, all can be revisited. So if you find one that you're in today, and that's what's most important to your business, don't discredit the other components within the stages, because these stages may be something that could have been overlooked and or something that you may want to add to your plan and use as a takeaway from today's forum. Next. As your business grows, your cash flow needs change. Here, you may want to really take advantage of opportunities as they arise, while at the same time, you may begin to enjoy greater access to financing. During the growth stage, prioritizing cash, at least 3 to 6 months of what you expect to need, may help you prepare for emergencies or slow sales periods. If you plan to hire employees, consider that you may have higher payroll expenses before you can recognize the additional revenue these employees may bring. Next. As we move out of the first 3 stages and really into the last 2 stages, which are 3 stages, which are maturity, expansion, and transition, here for your business, even when it reaches the maturity stage of cash flow, your business may never stand still. While you focus at this stage maybe on staying ahead of the game or staying ahead of the competition, it may also focus on improving efficiency, or it may include now a way for you to continue to monitor your cash burn rate. If too much cash is flowing out of your business, evaluate whether you still need all of the services, equipment, or even facilities your business is using. You may also want to talk to longtime vendors and suppliers about potentially getting better payment terms. Next. A major expansion can take your business to a new place. If you have substantial cash available, you may be able to use some of it to fund expansion. If you plan to borrow money, know that us as lenders will expect to see cash flow projections indicating how you increase revenue. This will enable us to really understand your plan to repay the loan that you're requesting. As you increase operating costs, pay attention to your margins. For me, margins have been shifting quite a bit, especially as we see disruptions in supply chain. But knowing what those terms are in the sense of margins will give you a chance to really negotiate trade discounts from suppliers and as your business scales. Next. When your business hits the transition stage and you begin to think about your end game, whether you're planning to sell the business or keep it in your family, you may want to enhance its value and stability. At this stage, you may want to consider a few things. The first is examining cash flow from the past 3 to 5 years to prepare earnings projections for potential buyers. The next is eliminating any expenses not needed for continuing operations. And lastly, factoring the tax implications of your exit and business sale into the cash flow projections early on can help prevent any disruptions as you move towards that transition stage of cash flow. Next. Now that we've learned about business concerns during the various stages of the business life cycle, let's dive deeper into the areas of cash flow and how financial institutions like Wells Fargo may be able to help you address your business's financial needs, starting with the making and receiving payment component. The financial health of a stable business can depend not only on strong revenue, but also on optimized cash flow. Arranging for the timely receipt of your receivables, as well as the strategic payment of your expenses. Next. Fortunately, there are some steps you can take that may help minimize cash crunches. Managing how you make and receive payments is the first step to supporting the health and success of your business. Here are just a few tips that may help you better manage payments and your cash. The first, accept credit and debit card payments from your customers. But first, really look at the options that your customers want to use to make payment to your business. You may offer a variety of different ways to do this, from paying you on site, maybe it's online, or even on the go, which is a very important and popular option today. In today's environment, having multiple ways for your customers to pay increases your opportunity to speed up the receipt of cash. The next is pay your employees. Take the complexity out of payroll processing. How to do that? Well, the first is really introduce efficiencies to funding employees timely, safely, and securely, giving you more control in remaining compliant with these payments. Now, for most of us, we're not payroll experts. So to be able to do this effectively and efficiently, we may have to look to our trusted advisor group to really find ways to make this happen. One option is to hire a payroll provider. Now, some businesses aren't ready for that today, but the good news is as you think about forecasting cash flow, which we'll talk about more in just a moment, you may have an opportunity to start to look at your bottom line with a new lens by applying some of these additional ways for you to operate more efficiently by forecasting them into that cash flow forecast. That way you understand what it will take to get your business where you want to be. So I always recommend using multiple different examples, and I'll show you more about what I mean here in just a moment. Pay your bills on time, but not too early. And this one's a hard one for me because we all know the importance of paying bills on time, but that too early component really resonates with business owners when I share this tactic, because what it will allow you to do is really keep more cash in your business longer. So when you're thinking about your structure today, I know that instinct is to pay your bills as soon as you get them, or at least upon receipt, but you can put your business in a bind by unnecessarily tying up your cash for days, by making that payment early, by paying bills closer to when they're due. you may be able to better control that day-to-day cash flow, which is a huge component of being an effective cash flow manager. The next is manage cash crunches. It's not uncommon for businesses to run short on cash, by no means. As bankers, we get that. As From looking at the bigger lender picture, we understand why that happens. But rather than run the accounts to zero, consider turning to your financial institution for ways to help manage cash flow through credit vehicles. Last but not least is track account balances with online and mobile banking. This is probably one of the biggest enhancements over the last few years across the banking world. We've really centered ourselves around providing customers like yourselves ways to understand your banking relationship. And banks today, specifically organizations that you may work with, utilize a variety of different ways to help do that. My favorite for business owners is to really use the alerts that financial institutions are offering. So that way, you know exactly when money moves in and out of your business. It makes it easier to track and or look for future ways to either enhance and or improve what's coming in and out of your account. Next. Great. On the next stage of what we'll talk about, it's really around creating safeguards to help cash flow stay positive. The second step in maintaining a healthy cash flow is really understanding your credit options. And at some point in any of the life cycles that we reviewed earlier, you can see that businesses will need credit to help enhance their business. Next. As a banker, I always tell customers peace of mind is everything. If you know you have the ability to tap into credit in case anything comes up, let's think about COVID, running your business may be easier because that feeling allows you to know where you can turn if gaps start to arise. The first for working capital really is around leveraging resources like a business credit card or a business line of credit to make sure that your business has the ability to really drive forward what you want to make happen in terms of any adjustments in your balances, in terms of what you're selling and or offering as your product or service. It may allow you to combat any challenges in terms of seasonality, and it may even give you an opportunity to really leverage yourself, your business, in terms of that buying power. The next component here is capital expenditures. Credit here may help you add or replace vehicles, equipment, and other fixed assets. Managing your cash flow with a lump sum of cash for your business really does give you the opportunity to deep dive and enhance that overhead or your bottom line by finding ways to lower some of the larger expenses that we have, which usually follow into this bucket. So some ideas and credit options that are available for you to lean into here as a business owner are business term loans, SBA loans, which I know from our friends in the SBA, they've been doing a great job in socializing everything that they're capable of doing. Then the part on a business owner is really trying to understand what those capabilities are. And then for any healthcare professionals listening in today, also looking at potential healthcare or healthcare practice financing is a great way to really build out what capital expenditures could be for your business. And then last but not least is the expansion component. And this is where you're really looking at acquiring, building, or even growing your business. If your business assets include commercial real estate, there are a variety of real estate financing options, including loans and lines of credit that may help you purchase, refinance, or tap into the already existing equity within your business. As you continue to explore the various types of credits available to you, ask yourself questions like, is now the right time to take on debt? In the case that I face a negative cash flow piece within my business? Your answer may be yes, but you may have some further research to do to really understand and hone in on what does that contingency plan look like that will allow me to leverage credit in a way that it makes my business more successful. And I'll circle back because I like to tie things together. That's where that plan component comes in. And I love to see when I review a plan with a business owner, these three components in that step 2 of the business plan, which really does dig into how will you finance and or operate your business. Tade, we can skip 2 slides if you would, and we'll go to the plan proactively phase of the life cycle. In this phase, really, this is where that plan proactive component starts to take flight, because what I see work very well with business owners is having that alternative plan in place. Whether your business is getting started or you're well established, starting out with something like a business savings account will give you the access you need in case of emergencies and or expenses that are ones that come up in a way that we didn't prepare for them. This is where this plan proactive tactic of saving money can help you overcome that. Now, I know savings can be difficult depending on what stage of the life cycle you're in. We saw that typically you don't see that until the growth stage. Now, as you think about your plan, here's another idea for you to take note of. But do I have an opportunity to even put something small aside? And it doesn't have to be a savings account. It could be something that you use within your own checking account, meaning I know my balance is X, but if I want to make sure that I have that cushion, my balance is really Y. And when you think about doing that for a small business owner, what you're preparing yourself for is really that next stage in the life cycle. And really, that next stage is what will help you take what you've already done, enhance it, but then also prepare you and your abilities, and even more importantly, the capabilities of your business, which makes it more appealing to those around you in terms of suppliers, distributors, manufacturers, and even us as those financial institution lenders. The last piece, and this is one where I challenge you all to go and talk to whoever you refer to in terms of banking needs, but start to ask questions around retirement plans. And there are a lot out there that are geared towards small business owners. The goal here is to really find one that works for your business and helps you start to look towards the future and look towards that next or end step of the cycle, which is that transition component. I'm a fan of this because we saw a lot of changes in terms of business operations throughout the last year and a half. And for some, they had to make some tough decisions about whether or not to continue to operate their business. Some had to change and pivot their business to find new ways to gain customers. And some decided that their business was no longer viable and looked to really close the doors. And when they did that, unfortunately for some, the plan wasn't in place, or they didn't plan proactively. And now it's created challenges or roadblocks that business owners have to get back through. So regardless of the amount, start early, have that conversation, find a way to really put these 2 safeguards in place. And I promise for disruptions, you won't feel them as much because you've taken these preventative measures. Next. So you've heard me talk a lot about it today, but we know cash flow management is a critical part of your daily operations. So now, how do we make it a part of your daily routine, right? That's the important piece. So for you as a business owner, these next few slides are really going to be the meat of what I wanted to talk about. The slides we covered were getting us to this place to really dig into cash flow management and how do we do that as a business owner. Next. Here are 5 steps or strategies for business cash flow management. Take note on any of these that you want to learn more about. And we also have Q&A coming up here in just a moment. And I'm glad to answer any questions you may have about any of these. The first one is really forecasting cash flow for the next 3 months. Cash flow forecast help by really creating a plan or a way to plan ahead and to avoid trouble before it hits. These projections don't have to be perfect. I want to make sure I say that. They are a forecast, but these educated predictions may help you as a business owner make smart financial decisions as things are thrown at your business, which happens constantly. The next strategy is around reviewing and updating your forecast regularly. This isn't something you create and then put it in a drawer and move on from it. Successful business owners who I interact with are constantly looking at their forecast and finding ways to either adjust or improve the output of that forecast. I've even seen business owners have a variety of these because they're strategically trying to map out ideas for their business, like adding an additional product to their product line. And they need to understand what that will look like, not today, because we know that product will make that business money, but getting that product launched, what will it take and how long will we see cash flow impacted until we start to see the benefit of that added product line. So by reviewing and updating these forecasts regularly, you as a business owner can really hone in on what can I do for my business that makes the bigger impact down the road versus making an impact today that may not be sustainable. The next strategy is around monitoring your burn rate and doing it very carefully. Burn rate really is the negative cash flow or the amount you spend each month. If your burn rate is high, you may run out of cash. You may and can avoid this by checking your cash flow statements carefully and monitoring each expense. Remember those tactics that I shared with you at the beginning. Challenge everything. This is a great place to insert that because it will help you as a business owner really understand the expenses and find ways to help improve and or eliminate or lower the cost of those expenses. Next is creating cash flow statements every month. So we talked about forecasting cash flow. That's different than the cash flow statement. The statement is actually the true output for the business. For unexpected cash flow shortages or for moments when cash flow is positive, that's where some of those areas that we covered just a few slides ago, like the plan proactive component of managing cash flow, come into play. This is where, as a business owner, you can help your business continue to be relevant by identifying additional opportunities because that cash flow statement is that story for your business. Now, as a business owner, it's taking that story and doing what you do best, and that's changing it into a strategic vision for your small business. The next is really planning ahead for those cash shortages or unexpected expenses. Cash flow will and may vary month to month or even week to week. This is especially relevant for seasonal businesses whose revenues fluctuate throughout the year. Prepare for shortages by creating an emergency cash fund. We called it that savings account. That savings account is dual purpose because not only does it allow you to put money aside, but it can create this emergency fund, which you can then turn to it versus using cash reserves within your business. There are other alternatives here in terms of lending options that also play an integral part in planning ahead. So definitely have a conversation with your financial advisor to really learn more about what options are available to me to make sure that when these shortages or unexpected expenses happen, you have an alternative plan, so your business continues to be the effective business and to operate the way you want it to operate. And then last but not least, incorporate useful technology. Tech tools, including QuickBooks, for me, help you as a business owner track cash flow. These services can organize your income and expenses. I love that because the organizational component allows you to look at them in a view that really puts the total out there. And as a business owner, the one thing I know about what you like to do best is to really identify the best way to get your product or service to your consumer. This is how we do it. Those tech tools give you the opportunity to minimize some of the work that you have to put in, so you can continue to do what you do best, and that's focus on the business. So leverage those tech tools to take some off of your plate. That way you have more time to do the things that impact the bottom line for your business. It's important to create and review regular documents like these and or include these strategies in your operations. Now, what we'll do next is really start to put some of these tactics into motion, by talking about how do these apply to a small business. Next. In less than an hour a month, you will be able to identify potential cash flow shortages, surpluses, and understand the future of your business. The first step is to start by projecting your future cash flow for a full year. Focus on the timing of income and expenses to identify potential gaps and estimate how deep they may be and how long they'll last. Look for patterns. That's probably the most important component here that helps you as the business owner. What happens at what point during the year? Is first quarter my busiest? Is fourth quarter my slowest? Or is that flipped? And because each business is very unique in terms of the product to market, this gives that opportunity as you as the business owner, to understand the in-depth understanding of your business. So those patterns and cycles will be critical to helping you look at forecasts for the future, but also look at the current cash flow statement so you can compare what you thought would happen versus what actually happened. And as you can imagine, a lot of these looked very different when we started a year and a half ago. Now for some of that has returned back to normal, but for some of us, we're still working on ways to get back to a place where we want to be. And having these forecasts available allow you to start doing that. So that way the plans that you put in place will start to take effect. So if you look on the right side of the screen, those are the components within the planning piece that are important to help you do those forecasts effectively. So things to ask yourself, really focus on how much cash you'll need to really cover potential gaps or challenges. This one's a hard one because we all want to think about the positives, but here's where, again, those individuals you lean on to get advice from, this is where they can really be helpful because they can help put in your mind things that you may not be thinking about and things you may not be working towards today to avoid. And then be proactive, so you are ready to encounter any problem head on. That is really the focus area of why I wanted to use this deck to share with all of you. It's because getting to a place where you're forecasting, that plan then will be more important because now you get to leverage what's in that plan to really take your business to the next level. Next. So let's put it to use now, and let's start to put a cash flow forecast sample together so you can see on paper what this looks like. So let's deep dive into how to create that cash flow forecast. Before you create a cash flow projection for your business, it's important to identify your key assumptions about how cash flows in and out of your business each month. For this example, the first key assumption is around receivables. These assumptions should outline how quickly you receive payments from your customers. For example, if most of your customers pay you within 30 days, a key assumption could be 90% of the sales will be collected the month after the sale. And the next assumption around payables, this assumption should outline when your payments are due. For example, if your vendors require payment within 2 weeks of delivery, a key assumption could be payables are due within 14 days of purchase. So let's go to the next slide. And here's now the start of an example for a cash flow forecast. So to get started, really all you have to do is create 12 columns across the top of your spreadsheet representing the next 12 months. Then on the left-hand side, list the following cash flow categories. The first is operating cash, beginning. This is the amount of money you'll have at the beginning of each month. The next is sources of cash. This is all the money coming in each month, receivables, collections, loans, etc. Now total the sources of cash by adding the amounts in the operating cash beginning row to the amounts in the sources of cash for each month. Uses of cash, which is the next section there, list every likely expense your business may incur, such as payroll, accounts payable to vendors, rent, and loan payments. Now total the total uses of cash by tallying all your expenses so you can see exactly what will be going out the door each month. Excess of cash or a deficit of cash, this is the number that counts. If you see positive numbers across the board, congratulations, you may have some extra dollars to invest back into your business. If you see a negative number for one of the months, don't panic. I know it's a natural reaction, but this is the good news because it's a forecast. You can start today by taking time to consider potential options to help prepare your business for when or to prevent that cash flow shortage from happening. If you see large differences from month to month, you should revisit your key assumptions to check for potential flaws in your logic. Even if your actual numbers come in higher than your projections, take a close look at your assumptions because higher returns in the short term could lead to shortfalls in the long term. Continue to refine your projections to keep your projections on track. My recommendation is to create a rolling 12-month plan that you update at the end of each month. If you add a new month to the end every time a month is completed, you can have a long-term grasp of your business's financial health. So once more, to create a forecast and to start to put this on paper, start by using either a sheet of paper or an Excel sheet. Put your months at the top, so do 12 from today, look forward, and then on the left-hand side, start with cash and any sources of cash, and then start looking at your expenses. The difference between those two is whether or not you have a positive cash flow or a deficit in cash flow. Let's go to the next slide. While your forecasts predict the inflows and outflows of cash, cash flow statements document the actual amount of income you received and expenses you paid. It's important to track the inflows and outflows of your business's cash so you can coordinate purchases and payments. Let's review, and it's very similar, a forecast versus a cash flow statement. A cash flow statement typically consists of the following three sections and gives an overview of the cash flow you spent toward and received from each component. So remember, the first one was a forecast. It's our predictions. This is the reality, which is the statement. The first of the components within the statement is operating activities. This section summarizes the cash you earn for selling your goods and services in a given period of time. Include your earnings before interest and taxes and adjust for non-cash expenses such as depreciation. The next component within the statement is investing activities. This section covers cash transactions related to your business's investments, such as equipment, property, and other major assets like employees. For example, profiting from renting part of your property to another business would be a credit entry here, while buying a new piece of equipment would be a debit. So one will add to it and one will take away. We know that when we add something that cost, that's when we take it out of the statement or reduce our current cash flow. The third and final component typically used in a cash flow statement is the financing activities. This section accounts for external factors that affect your cash flow, such as loans and equity sales of common shares of your company. If your business isn't using that as a tactic to raise money, then financing activities can be looked at as additional ways to obtain financing. For example, using a line of credit and or paying off a part of a loan could fall into this component of the cash flow statement. On the next slide, once you've created your cash flow statement, use it to see how well you're handling your cash and to gauge your cash flow and how it may be affecting short and long-term finances. Next. Analyzing your cash flow and operating activities may help you answer questions. And these are 3 questions that I challenge business owners to ask themselves when they do this component as an activity. Is my business generating consistent and sufficient cash versus revenue? Number 2, am I making any ill-timed purchases or payments? And number 3, am I making progress on my loan repayment? All of these together have given you an outlook as a business owner that will help you evolve your business by really understanding within your business what does it look like when we put on paper how our business operates. Once you've generated and analyzed the cash flow statements regularly, I promise you, you will notice trends that will help you make decisions and improve your overall financing strategy. I'll leave you all with today some free educational resources because this topic is not one that doesn't go without practice. Next. And I know how important today learning more about how to be in business and specifically more around cash flow is critical to really helping drive your ability to leverage the resources we talked about and to help your business. Next, I'll talk a little bit about our Wells Fargo Works section on wellsfargo.com. I love this resource and I use it a lot with business owners because we have an entire section geared towards cash flow and financial management, and we have resources available to help you create a cash flow projection. So to leverage this resource, and this is a free resource, go to wellsfargo.com. You'll see a tab at the top that says Small Business. Once you're in there, you will see our business resources and you will see links to this topic around cash flow and financial management. And included in that topic, beyond what I shared, are not just articles, but they're videos and insightful resources that we've learned from business owners that we want to make sure all business owners have an opportunity to learn more about. All right, my time is coming to a close today, but I know this topic, and this isn't a topic that an hour does it justice. What will do justice is by you leveraging what you learned today and having a conversation with someone you trust that may already be doing this, or lean on the relationship that you have with your financial lender or your financial representative. We call them bankers. And open up this dialogue and really start to understand the moving components within it. It isn't something that you have to create immediately, but it is something that I challenge you to start looking at, especially now. And we're at a good time during the year. We're right at the end, which means that on the horizon is a brand new year. And this could be a tactic that you include as a part of what you want to do to develop as a business owner. Next. So, a big thank you to all of you for taking time out of your day and really for taking time to listen to what's on my mind. Now, I'll tell you, I couldn't do it without uh, organizations like the Hispanic Chamber, those local chambers that help drive small business forward. That's where you have a tremendous resource in your pocket. Now it's time to start to leverage and ask for that guidance and advice that I know they're willing to provide. So, Tade, I'll turn it back to you, sir.
Thank you so much, Joe. Let me go back to the main screen. There you are. And I'll add myself to it. There you are. Joe, thank you so much for such a detailed presentation. You provide us with a lot of valuable information. I want to be very respectful of your time, but I have a few questions that I would like to ask you before we leave, if that's okay with you.
Please.
Perfect.
Yeah, absolutely. Let's do it.
Okay, so the first one, you talk about having sufficient cash flow in your business, and you kind of like gave us a range of like 3 to 6 months, right? But in simple terms, if I own, let's say, I'm a small contractor in Arizona or San Diego, and you mentioned that the reality is oftentimes for small businesses like that, let's say less than 5 employees, it's a little bit difficult. But is how much money do you think they should have to say that they have a good foundation of or a secure amount of cash flow in the business?
I wouldn't put a dollar to it. When I use that quote, we're talking 3 to 6 months of forecast and to know what the future looks like for your business. What I would say, instead of adding a dollar amount, I would say, if as a business owner, I'm forecasting out what it means for my business in terms of cash flow, then I can help prevent any challenges and or disruptions in my business. And to your point, that's the hard part, right? If I were to throw a number out there, it's going to be different in every type of business industry that's available. But if I'm a business owner, a small business owner, if I know at the end of each month I'm walking away with X amount forecasted, then I can feel comfortable about the day-to-day operations that I'm currently engaged in. Now, if I'm falling into a place where I'm in that deficit space, that's when plans have to change and or we have to adapt to overcome those gaps. This is why I'm so passionate about it, because for some business owners, most business owners, that bottom line or that break even point is the unknown. And operating in a space where we don't know what it takes to operate our business is detrimental to the business.
For sure. You talk about setting aside money, for your taxes and stuff. Do you recommend to a small business multiple bank accounts, like one for taxes, one for emergency fund?
Yeah, great question. And this is definitely a dialogue to have with whoever helps manage their relationship today. But for business owners that I've worked with, there are instances where having the different accounts makes it easier to reconcile those accounts at the end of the day. Now, if you're a person who likes to live in that simplified world, having one is definitely doable. But there are challenges for each. The challenges for having multiple, of course, you're managing multiple accounts. The challenges for having just one, things can get commingled, and then it becomes harder to decipher at the end of the year, what did I actually spend on my business? The one thing I will say, you shouldn't commingle personal and business.
Mm-hmm.
So if you're that, I would definitely say you should have multiple, have your own personal accounts, have your own business accounts, but in the space of for your business, do what feels comfortable to you. The good news, and it's easier today, whereas in the past, I had to have multiple accounts to keep track of certain things. Now with some of those technology enhancements, I can use platforms that help me do that separation. So
Mm,
definitely a good dialogue to have with your banker, depending on the need of your business. I've seen it go either way.
perfect. Like that. You talk about the importance of the business plan, and that's something that I encourage every business owner that comes to us to have one, whether it's on a napkin or a couple of pages. But they have to have a clear idea of where they are and where they want to take their business. But how important it is for a bank or a financial institution that provides access to capital for small businesses to see that business plan.
I mean, this is for me probably one of the more important components, but I'll tell you, I've had to start to shift what I look for, and I've started to look for adds to the business plan. What we don't want to see is what you used on day one to launch your business. What we want to see is how has that plan evolved, and how have you started to include new components within that plan to really help you shape and model the future of your business. And I've been on a somewhat of a high horse for the business plans for the last year and a half, because I know for a lot of business owners I interacted with when COVID hit, they didn't have that pivot point in their plan, and it became a pain point, a significant pain point. And so I've been doing a lot of work now to really ask more questions around the plan itself, and what are they doing to make modifications to the plan. So definitely an important piece. And for us as a lender, if I put that hat on, it does show us your ability as a business owner to be strategic, but it also gives us the indicators we need to make a viable and good lending decision on whether or not to extend credit.
Yeah, because to some extent you want to know what the business is gonna do with the money, right? You
Yeah.
don't want a business owner that is asking for $100,000, and when you ask them like, what are you gonna do with that 100K? I was like, well, I think I'm gonna purchase some equipment and maybe invest in some marketing. I'm still trying to figure it out. That's not a good answer, right?
Yeah, no, I mean, a good answer would be, here's what I'm going to do with it, and here's how I forecasted for the next 12 months on what the funds will go to and how I will make repayment. That would be the answer we're looking for.
And now, like, kind of like to piggyback on this topic right here, you talk about the importance of having some skin in the game. When it comes about capital, and when it's a startup, and especially in the Latino community, something that I have seen is that we usually start small businesses with our savings,
Yep.
or we reach out to friends and additional family to support us with our startup. Is that a good indication for you guys to see that this business owner was already able to sell that idea to investors, family and friends, and it gives you as a banker like, oh, this guy is going in the right direction. He has a business plan. He was able to fundraise some money or seed money, with friends and family. Are those two factors a good indication that this business owner is going in the right direction for a lender?
Any diligent lender will want to know the initial story. Um, you said skin in the game, which is a term I like to use because it doesn't indicate just money, it indicates time spent, it indicates the idea and how quality of an idea it is, it indicates the level of work and passion that goes behind operating any business. And when we look at those components, that's the starting point to really show us where the business's direction is headed. But really a good complement to that. I love knowing it, but I love seeing it on paper. And to do that, that's where those cash flow forecasts come into play, because those dollars, yes, they came into the business, but what did we do with those dollars to really operate the business? That's the question that I think for some it completes the book, right? So we want the initial part of the story, the cash flow forecast help us understand the middle part of the story, and then your cash flow statements actually help us understand the end of the story.
Thank you, Joe. How soon do you recommend for a small business to start working on their business credit?
I say from day one. There are resources aplenty, and the good news with the small business community, and one of my favorite reasons of why I love being a part of this community is because people rally around each other. And the one thing I see as a roadblock in getting credit started is just the sheer understanding of what it means to obtain debt for your small business.
Mm-hmm.
It's very different than obtaining debt as a person. Your business has its abilities to generate income. And that's the component. And we're, for those listeners on our webinar today, that's what should help you feel somewhat comfortable, because a good lender, a financial institution, will make sure your business is capable of repayment. And I know for some of us, we always look at a decline on the negative side. But what I always tell business owners, what a decline really is telling you is that we have some gaps in your cash flow that we have to figure out. And you should want to do that as a business owner, because those gaps in cash flow will eventually cause pain points that at a point you may not be able to recover from. So starting credit early, or at least starting the conversation around credit, I think is critical to any small business's success.
And just to follow up on this one, Joe, you talk about managing cash flow through different credit vehicles. So once the business has or started working on building business credit, you recommend to use different credit vehicles instead of tapping into cash, to pay for maybe equipment or expansion or something like that. Is that a better strategy that you recommend?
Yeah, absolutely. And my recommendation usually comes from what I see in the cash flow forecast. I always think about credit as that supplemental avenue for me to go towards for my business. And there are instances where I need to borrow or use credit to get something started within my business that will generate revenue that allows me to pay off that debt. And it can also work on the flip, where I may have an abundance of cash. And if I do, then as a business owner, a savvy business owner, understanding that forecast, you'll be able to make a decision on whether or not to use cash and or use credit to help your business. But I will say to the listeners, there are different vehicles for different needs. So when we think about the different types of credit products, that credit card, we should use it for the day to day. It isn't built to be used for long term. If
Mm-hmm.
you have a need for a long term financing, definitely visit with your financial institution and have a further discussion about other options, because there are other vehicles that are better built to do that type of an activity. For instance, if I'm looking for a way to supplement gaps in cash flow because of seasonality, I wouldn't turn to a credit card to do that. I may, if I'm starting out and the gaps aren't that big, but I would really want to look at more of a line of credit, because they're built in order to borrow more. And then, of course, they're cyclical, so you can pay it off and then reuse it again as your business needs it. And then, of course, beyond that, there are other forms of credit that do more around larger purchases,
Mm-hmm.
and especially around real estate or buying commercial real estate and or equipment. Definitely look into your options, business owners. That's your diligence on being a business owner. But just know that credit cards are more for day to day. Lines of credits do handle more supplemental, and then equipment financing and or real estate financing do more of the larger purchases.
That's perfect, and that's why it's so important to keep all your internal accounting in order.
Yeah.
Because I mean, we saw it throughout this pandemic. A lot of businesses were not able to qualify for the PPP and other loans that were available because they were not ready. Administrative speaking, like they didn't have the documents in order, and they missed the opportunity to have access to these loans that were available for small businesses. So, regardless of a pandemic or not, it's very important that you have your accounting in order. And kind of like to follow up on this thought right here, you talk about uh, forecasting and keeping track of your investment. I'm sorry, your cash flow statements and your projections. So, do you recommend, because we have talked about here before, if you are a solopreneur, act like the revenue director of your company, where you are keeping track of everything that you are generating, but also have like a digital dashboard, um, uh, a dashboard that it gives you a report on a daily basis, even if you want to, of how much money is coming in, how much money you spend, and that digital dashboard can, you can set it up like monthly, quarterly, or maybe like biannual, depending on how you are running your business. But that will give you a very good picture of what's happening, right? Because you said it's important to use technology to help to optimize your operation and know exactly where you are with your business.
Yeah, what a nice part of the time we're in, right? As a business owner, those tech tools are more enhanced than ever before. Um, and there are a lot out there. So those trusted advisors, get some insights from them on what they're currently using and or leveraging within their own business. Because what we don't want to happen is we don't want it to bog you down as the person who makes the money for the business, right? I mean, you are the brain behind the idea. So leveraging those tech tools will help simplify some of that for you. And then to your point, they do a very good job in keeping you informed.
Mm-hmm.
And I love when I see a business owner leveraging the forecast insights on a more consistent basis than just revisiting them even just once a month. I think the more we know about the ins and outs of our business, the money moving in and out, the better equipped we are to operate our business more effectively.
No, for sure. Let me ask you the last question, Joe. What advice do you or can you give to a small business, just starting up, because you talk about receivables and payables? So what advice can you give to a small business that is just starting up on how he can negotiate payable terms?
Yeah.
Because
And
they don't
at the
have a lot of
starting
leverage,
point, yeah, yeah, no, and I think from the starting point, it may be a little harder. I'm a realist, right? Very transparent, but I always like to include it in a forum like this because I want a business owner to know the power of their business. And again, and for some out there listening, I may sound like a broken record, but if I know in my forecast what I'm capable of doing, and if I can project based on seeing growth in my bottom line, then I may be able to use language like, distributor, I plan on with my current projected growth to buy 10, 20% more from you over the next year.
Mm-hmm.
That to a distributor resonates. But
Yeah.
if you just ask for the payment reduction, they're also in business to make business.
Mm-hmm.
So until we show them what we're going to do for them, and then in the reverse, ask for what they're going to do for us, I think that's the best advice I could give. So the more you know about the future of your business, the better equipped you are to ask for those different terms depending on the vendors that you use.
No, that's perfect. So we go back again to the importance of having these digital dashboards and the projections, because eventually those are gonna be like tools on your favor that are gonna help you to negotiate terms too, and help you grow your business. It's all strategy, and you mentioned it, and
It
you
is.
mentioned it multiple times. A business without strategy is like an airplane without a pilot, right?
That's yeah. And that business owner, you are both of those in a small business. So
Exactly. Joe, thank you so much for your time. I don't know if there is anything else that you would like to add before we leave.
just one last thing, and really it's around the guidance and advice component. A big thank you to the work that you do, sir. You are an individual who I've followed on social media for some time now, and the one thing I know about you is you care. And for the business owners listening in, I think that is a big part of the small business community, is that there are people who want to offer up their expertise, guidance, and support. The one challenge I put out there, and the thing I'll leave these business owners with, is just be willing to ask.
Mm-hmm.
in the small business community, you tend not to get no's. You may get some not right now or maybe down the road, but it's usually not a no. And chambers like yourself and other chambers that focus on Hispanic business owners, I think, are the difference maker for any small business owner. So a big thank you to you and any of our other chambers who are listening in. You're in it for those business owners. So keep doing the hard work you're doing. Thank you.
Thank you so much, Joe. And I also want to thank you, for your involvement with the business community and also associations like ours, because when we have the opportunity to collaborate with folks that have your background, that understand the industry, understand the pain that small businesses have, you take that to at the corporate level, right? And you come out with programs and initiatives that really help the small business community, the backbone of our economy. And you provide us, or you share with us, a really good tool, which is Fargo works for small businesses. I send small businesses there for like market research studies, and now we can send them, for the cash flow management and analysis. So it is important for small businesses to know that there are resources, there are associations like ours and other Hispanic chambers across the country where we usually collaborate with, to use all of us to their advantage. And when you mentioned it earlier, collaboration is key, and it's such a pleasure to have you today on this show. And we'll probably send you some more other questions as we get them. But thank you again for your time, Joe. And you can count on us for anything that we can help you out with.
Yeah. I plan on joining future ones. I mean, this is how I learn as well, to do more, like you said, to serve small business owners like the ones that are listening in today. So absolutely. Thank you so much.
Have a nice week and happy holidays.
Bye, everyone. Happy holidays.
Bye. Take care.
Bye.